Okay.
Now, with all these new concepts and market maker speculation, what is more safe to? I mean, I personally see that trading future was safety for me, and now that I know all this manipulation, is this really why it's so public that trading future is the risky stuff?
Why is it so public trading futures are risky? It's education. You know, before Christopher Columbus sailed around the world, everybody thought the world was what? Flat, right? If you think about education in the stock market, it's come a long way very fast. And because it's come a long way very fast and it's so new, there's still a lot of thought process out there. So it's come a long way for those who are educated. They asked my parents about investing. No, all you do is buy and hold. Anybody know anybody that only do buy and hold? I don't know a lot of people that I talk to just in my housing development where I live that just buy and hold. So what do you do in the stock market? How come you never work? Why is your car always home? What do? You sell drugs? It's a nice house. What are you doing for that? I invest in the stock market. Really? So how does that work? I mean, like you buy mutual funds? To me, mutual funds are so outdated. What would you buy? What would you do instead of a mutual fund? An ETF. Why would you pay all those huge commissions on a mutual fund and only be able to sell them at the end of the day when the markets are closed and put it in order for the next day? Why would you do that if you could do an ETF and get the same thing but a much lower commission and do it intraday and sell short if you want to sell short versus buying in the downtrend? It's education, right? So why do people still buy mutual funds? They just don't know any better. So most people have heard about futures. The index options futures for like the ESs have only been around since the end of the 90s. So they've only been around about 10 years now. So most people think about futures, they're thinking about what? Not thinking about trading the ES, they're thinking about commodities, corn, oil, sugars, cocoa. They're thinking about things that if I buy this and I'm wrong, they're going to back up a truck and give me 48,000 barrels of oil in my front yard and I have to buy it. And that's what most people think about when they think of that versus what we're doing now. Talk about options. I talked to my futures broker who wanted me to do some more training classes at a Live Traders Expo in Las Vegas. I said, well, what would you like me to cover? And I said, hey, would you like me to cover some options on futures? Oh, no, Mike, we don't do options. That's risky. This is coming from a futures broker, creates futures, and they consider options to be risky. Now, what would you consider to be risky? Futures. It's just the education part all that boils down to.
My last question. I was told here that never trade future because I'm playing against the best of the world. If that's true.
Never trade futures because you're playing against the best of the world.
Against the best of the world.
When you buy an option, who do you think you're buying it from? The best of the world.
And cheaters too. So that means that person that buy was really wrong?
Does that mean they're really wrong? It just means they probably didn't want you to trade futures.
Oh.
If you go to, are your parents still alive?
No.
Okay. Do you know anybody that's in their 70s or 80s?
Yes.
If you walk up to them and tell them you want to trade options, and you would like to take their money and manage it and trade options, what do you think they're going to tell you?
That I'm crazy.
Why would they tell you that? Because they don't completely and fully understand or trade those. So if you really want to know, and I can't tell you what to buy or sell. I can't. You have to buy or sell whatever you invest in, what fits your personality. Everybody has a different personality, which means they see things differently. You have to buy and sell what fits you, but if you want to know what you should really invest in, you talk to somebody who invests in what you want to invest in and ask them all the pitfalls and all the profitable potential on both sides, and then you weigh out. If somebody tells you you should or shouldn't do something, that's up to you what you decide to do. But I wouldn't listen to somebody who tells me don't do this unless they do it too, and they're successful at it. But if someone tells me don't do this and they lost money at it, well, I'm not going to talk to you. You're already a loser. In a positive way. Don't call me a loser. Don't tell me not to do this if you can't do it yourself. Let me talk to somebody who does this, who's successful, who understands both sides of it then, who can give me an honest answer, and then I can weigh out what I'm going to do or not do. And that's how you look at it.
Have you written anything for anyone that you know, written anything? And you went by the ETFs real fast. I'm wondering if there's any place I could back up and review some of the things that you
Sure, if you want to back up and review, there's a lot. If you just go to like a Google search browser and type of ETFs, there's a lot of really good free information out there. There's a lot of really good stuff. If you go to my website, I have a CD that I've done on ETFs. I think it's $29. But go to the free stuff first. If you want more information, then check out my website. But there's always so much free information out there. Always check out the free stuff first.
Can we get your website?
My website is Income Trader, INCOMETRADER, incometrader.com. There's a little link that says store. But always check out the free stuff first. And understand the free stuff is going to be out there. There's so much of it that the only reason you would pay for something, with as much as out there today, if you want something specialized to really focus on what you're after. But the free stuff, you gotta have to search through it. But there's a lot of really good stuff that's out there for everything. So check it out. Free stuff first.
Is there some way to evaluate that? It's just like going on the internet now. There's knowing the quality of what you're getting. I don't know.
No, there's no way to, unless you talk to somebody else that's doing what you're doing and ask them what they're using. That's how you find out the quality. Otherwise, you just kind of up in the air. Mine's the best, but no, I'm a little biased. But that's why I always say, you go check out the free stuff first. I don't want you to pay for something I have if you can get something you like for free. So I'm all about free stuff first.
Question. My son just started a new job. He's just fresh out of college, and they have the company 401k and mutual funds. That's what they have, and they give him a 6% match, up to 6%. Would you recommend that he does that, or would it be better to take, if he's just starting out, to start his own stock fund?
Okay, I'll get this last question. I'm going to go back and we'll pull up some more trades, and I'll come back and ask some more questions. The question is, your son's in college.
Just out of college.
Just out of college, has a new job where the company says that if he puts in so much money into the 401k, they will match up to 6% of that amount,
Correct.
right? I think it's a fantastic deal.
Okay.
Until your son knows what he's doing and can make more than that, so he put in his 6%, the company puts in 6%, whatever he puts into, up to 6%. Until your son knows how to make more than that, or you can, take whatever they give you. It's free 6% a year. I think it's a fantastic
That's what I
deal.
told him.
Do that. Okay, so let's go back now to the PowerPoint presentation. All right. So we talked about investing rules. These are the rules that I use when I'm investing that have worked well for me. Everywhere you go, everybody's got some investing rules. I try to keep mine really simple, no emotion. Difficult for a lot of people. If you're a white-knuckle trader, then you have to have somebody else that invests with you. So if you get really panicked or freaked out or just really scared over the stock market, you need a trading partner. So like I said, I have my brother and my sister, and we all free trade. Slightly different between all three of us. So even though they have their own styles and I have my style, it's nice to hear their opinions. It's kind of like, I don't know what you were doing, but I was listening to Tim today when he was talking. I don't understand everything he understands, but I wanted his general concept, what he thought the markets were doing. Whether or not he was right or not doesn't really matter to me. What I really wanted was somebody else to confirm what I was thinking. Because if he confirmed that, it made my trades all the more strong. And if he didn't, then it just says, doesn't mean I'm going to change my trades, but it means I'm going to be a little more careful with my trades. That's all that means. I'm still going to do what I want to do. So same for you, just no emotion. Use your own strategies. So I'm showing you some different ways to trade here. You have to pick what you do best. My brother just loves trade futures. He's very good at it. Stacy's a very aggressive trader. She uses different strike prices than I do. But you have to use your own strategies when you trade. And the reason for that, it won't make any sense if all you do is copy somebody else, but you don't know what they're doing. It has to fit your style. That's why I asked you to look at those charts earlier. Some of you said that you were bullish, and I said, are any of you neutral or short-term bearish? Based on how you see things, the strategies you choose have to fit your thought process. Position size, don't over position size, which means if you only have $1,000 in your account, don't spend every last penny on one trade. Because how are you going to fix it if you need to adjust it? The position size, probably make sure that you have extra cash. I'm not going to tell you how much do you position size. That's not what I'm here for. I'm just saying make sure that you only spend a little bit of money in each one. Even when you go to buy a house, they say your loan-to-value ratio should be approximately what? 20%. Yes, let's say 30% or so. I don't know. I have no idea what's at today. I don't know. But even there, they're saying you have to position size. When you're buying a new house, you have to position size based on what you can actually afford. Same thing here.